Hello friends, welcome to this video on GST. This is basically an introduction video which can help you to understand the overview of GST, which is considered to be one of the biggest tax reform after 1991. GST stands for Goods and Services Tax. It is considered to be the biggest tax reform since 1991. GST is expected to simplify the current tax structure, which is considered to be very complicated in nature. It also helps to improve the transparency on the overall taxation system. Overall, GST helps the government in achieving the objective of increasing the tax revenue by widening the tax base. Before getting into the details of GST, let us look at the existing tax structure, which are considered to be very complicated in nature. Tax are broadly classified as direct tax and indirect tax. Direct tax. Direct tax is considered to be the primary source of revenue to the government, which in turn government will use such revenue for the infrastructural development and social development schemes. The tax levied at the source level are called direct tax. Such tax will be naturally levied on people who generates an income in form of salary. It will be levied on corporate which generates profit. It will be levied on property where the wealth is created in form of capital appreciation. Such an arrangement of tax collection system is called direct tax. Please do remember the tax liability cannot be transferred under direct tax regime. Here we have listed some of the common direct taxes that prevails in India. One is income tax, other one is wealth tax. Now let us take an example of income tax. An employee who is working for an organization generates income in form of salary. This employee is liable to pay tax to the government. The employer acts as an intermediary to the government who collects the tax from the employee, in turn paybacks to the government. Such an arrangement of system is called direct taxation system. Indirect tax. Tax levied on every purchase of goods or services is called indirect tax. Indirect taxes are levied on several occasions. One is on consumption, other one is on service. Whenever a consumer purchases goods, the indirect taxes are levied. Since indirect tax is a destination based tax, the tax liability can be transferred from one person to other. Indirect tax again classified as central tax and state tax. Central taxes are collected by the central government. State taxes are imposed by the state government. Here we have listed some of the common indirect taxes with reference to central tax and state tax. Some of the common central tax are service tax, which is levied on services; customs duty, which is imposed on imports; excise duty, which is levied on manufacturing; GST, which is levied on sale of goods. Here we have listed some of the state tax. Sales tax, which is imposed on goods; entertainment tax, which is levied on movies; octroi, which is a state tax for entry of goods; value added tax, which is imposed on goods. These are the common indirect taxes that prevails in India. Let us take service tax as an example for understanding indirect tax. Eating out will be an expensive affair even after the food prices are settling down. Have you ever thought why this happens to you? When you approach a restaurant for the service of food, You will be exchanged with the invoice for the service rendered. If you go through the breakup of bill details, you will be surprised. You will be end up paying more than the bill amount. Do you know why? The reason behind that is you are paying an indirect tax for the service rendered by the restaurant. The restaurant, who is a service provider, collects the indirect tax on behalf of the government and paybacks to the government. As a customer, you are paying the bill amount, indirect tax. In addition to that, the service charge imposed by the restaurant. Restaurant in turn collects the indirect tax and deposits to the government. This form of arrangement is called indirect taxation. As a consumer, you are ended paying more than what you have ordered for. The reason behind that is you ended up paying indirect tax to the government. Now you may be asking me the question that then why we need GST? Is that to add more fuel to the fire? It is not so. Before answering you to this question, let me throw you some of the common challenges that prevails in the current indirect tax system. The first one being the multiplicity of tax. India as a large country has 29 states and 7 union territories, and each state has a different indirect tax system. In addition to that, the central government also possesses some of the indirect taxes. With so many indirect taxes that prevails in an economy, complicates the ease of doing business and increases the burden of consumer. The second biggest challenge would be increase in price. Suppose a goods manufactured at one state to be sold at the other state has to go through different cost. One is the different state taxes, the next one would be the transport cost, and the third one would be the toll cost. All these three costs is to be added to the cost of goods sold, which will result in the increase in price of goods sold. The third challenge would be shipment of goods. If goods manufactured at one state has to move to the distributor at the other state, from the distributor it has to move to the retailer in multiple states and then to the consumer. A finished good which is manufactured at one state to reach the end user at another state is a time consuming process. The primary reason is that the transportation procedure is very stringent at different states. As a result, goods are delivered with abnormal delay that result in the business loss as well. The fourth biggest challenge that prevails in the current tax system for the government is tax evasion. In India, still there are many companies in different sectors which are naturally unorganized. Why they are tagged as unorganized? Because they use the loopholes of the current tax system, they underreport their income, they pay low tax and incur tax revenue loss to the government. The biggest threat to the government is not the unorganized sector itself, but the size of the unorganized sector that contributes to the GDP growth of India. By implementing the GST effectively, the government is strongly believing in pushing most of the unorganized sector to the organized system. As a result, the tax evasion will drop significantly and the tax collection will grow phenomenally. By overcoming all these challenges will enable the government in achieving its long-term objective of widening the tax base, increasing the tax revenue and declaring the surplus budget for the first time. All these challenges can be overcome by implementing one effective tax regime, which is none other than GST. After GST is successfully implemented, the government expects the GST system to eradicate the challenges that prevails in the current tax system. GST is expected to subsume all indirect taxes. It is expected to control inflation, not immediately but definitely. GST is expected to improve the efficiency on input tax credit and tax refund process. GST helps the government in increasing the tax revenue which is the long-term objective of Indian government.
India is one large country with more number of states, with more number of regional languages, is expected to get unified under one tax regime called GST. Let us warmly welcome GST that is expected to create one nation, one tax and one market. Thanks for watching this video.